Every year, nearly 40% of small business owners dip into personal savings just to keep their company afloat. But what if the solution isn't your wallet, but your business itself lending you money? Let's unravel this overlooked strategy and see if your business can actually loan you cash. Can your business really loan you money, or is that just a shortcut to trouble with the IRS? It's a question many entrepreneurs are afraid to ask, but the answer might surprise you. When your business is set up as a separate legal entity like an LLC or corporation, it can technically lend money to you, just like any bank would. Why would you consider borrowing from your own business instead of just taking an owner's draw or a distribution? Here's where things get interesting. Unlike a regular draw, a formal business loan creates a legal obligation for you to repay, and this opens up opportunities for both you and your business, like keeping your company's cash flow steady and potentially avoiding immediate taxes on the funds. How does a business-to-owner loan actually work? Imagine your company as its own bank. If you need $20,000, 0 cents, for a personal emergency, rather than pulling that out as a taxable distribution, you formalize it as a loan. You sign a promissory note, set repayment terms, and pay interest, yes, interest, back to your own business. Does this sound complicated? Not really if you follow the rules. The IRS cares about substance over form, which means your loan must look and act like a real loan. That means a genuine repayment schedule, reasonable interest rate, and proper documentation. Skip these and the IRS could call your loan a disguised dividend or taxable income. What are the risks if you don't treat the loan properly? Picture this. You borrow $15,000, 0 cents from your company, but never pay it back or set any terms. During an audit, the IRS reclassifies that money as income, and suddenly you owe back taxes and penalties. That's a headache you don't want. Is there an upside for your business? Absolutely. When you repay the loan with interest, your business earns income, which can help its bottom line. It's like making your business its own mini bank, generating revenue from money it already has. Are there limitations? Definitely. If your business is struggling or needs its cash for payroll, expansion, or inventory, lending money to yourself could put everyone at risk. Think of it like borrowing from your kid's college fund. Possible, but potentially damaging. So, what's the smartest way to do this? Always get professional advice. Work with an accountant to draft a formal loan agreement, use market interest rates, and keep detailed records. Treat your business loan as seriously as you would any loan from a bank. If you're unsure, explore traditional business loans from trusted lenders, like SBA-backed loans or business lines of credit, which offer competitive rates and clear terms. Could a business-to-owner loan ever help you avoid high-interest personal debt? It's possible, especially if your business has strong cash reserves and you need quick access to funds. But mismanaging it could lead to legal and tax troubles, so always weigh the pros and cons. Because knowing how to use your business to fund your personal needs is just one side of the coin. The next video reveals how forgivable loans could put cash in your hands without ever needing to pay it back, if you qualify. This is the game changer you can't afford to miss.